eyes are on the Fed rate decision Wednesday afternoon. We're also in the heart of earnings season, and so in these videos this week, we are going to take a look at some key companies that are reporting earnings the following day. So today, we're going to be taking a look at companies that are reporting earnings Tuesday. Before the bell, we've got UPS, Coca-Cola, General Motors, Raytheon, and McDonald's, and after the bell on Tuesday, we have Google, Microsoft, Visa, Enphase, and Texas Instruments that we're going to take a look at in this video. So let's start right off with UPS. Now, UPS had a breakout in this zone back in 2021. And so we're looking at 170 and about that 180. This was that big breakout. It held, and then we tested the bottom end of this range earlier this year, and from May, June, July, we've put in higher lows. We've also put in lower highs. The key on UPS is a move back up over 190. Right, and the support zone's back down at between this 180 and this 170 zone. A move underneath of this, we don't have much below that 150 until we get that gap all the way back down at 130. So 170 is going to be the key on this chart to hold, and 190 is going to be that key breakout spot that we're watching. Coca-Cola green on the year, so a leadership name this year in this tape, right? Safety, dividend-paying stock has done well. It is looking like 60 is that inflection point. We've traded above and below that many times this year. 58 has held as that major level of support, and you can see from March we have put in a series of lower highs. So what we're looking for out of Coke is really to take out this last key high, which is 64 from May. And on the hold side, we're going to watch that 58 to 60 zone as the key for this chart to hold. General Motors had a really strong start to the year, end of last year, and it was just a straight slide from that breakout there in January, February. Pulled all the way back, and I'm going to back this chart up. So remember, we got 10 years worth of price data on this. This is the major level of support that we have going all the way back to 2013. You can see this zone as being very important multiple times throughout the last decade. Where do we hold? We held that 30 on this pullback. Bottom end of this range really comes down to about that 27. So this 27 to 30 zone is decade-long support. That is where we held. We still, again, have a series of lower highs that are put in place here throughout the course of the year. If we're looking at this, we need to see a constructive move above 36. The big level is going to be right around that 40 zone. A move back up over 40 puts us back over that 2020 breakout zone, and then that gives us the potential for those higher prices. So 40 is going to be the big level on the upside. We need to see that 30 zone hold in on the downside. Raytheon, we had a breakout in the beginning of the year as well to new all-time highs. We were unable to hold over that zone. And you can see we're trading right back around that other key inflection level going all the way back. Here's 2018's price action, a breakout in 2019. Resistance, resistance, resistance before getting that breakout finally. 88 to 90 zone in on support. That is what the bulls have to hold on to. Again, a series of lower highs have been put in place over the last few months. Really a move back up over 100 is the major key on this chart because that goes back and plays to those major key breakout levels in 2018 and 2020. So watching 100 on the upside and 88 on the downside in on Raytheon. McDonald's, you can see the really important of this 220 to 230 zone that's right in here. That's where we get that breakout in 2021. We held that zone on a closing basis. On this pullback here in March, we held 230, and you can see we've put in a series of higher lows here over the last few months. We've also put in those lower highs. So what do we have? We have that wedge building above that major level of support in at 230. Looking for a move over 260 to test that all-time high zone, and you really want to see that 230 zone hold in on the downside. Now, after the bell, we've got Google. Now, Google's chart here is in a very important spot. All right, we had this gap breakout back in 2021 off of those first earnings, and then we continued to have that solid, strong push. We have now tested that zone. That's right in now at 100. And if you look at what we've got, we have a very clear pattern that's set up. This is a bear flag, right? We have this flagging pattern setting up, coming in from above. A break below this zone really opens us up to the downside, right? We have some support down around 80, 85 in that zone. If this area holds and we get that push higher, 120 is the zone that we need to get above in order for us to get any sort of upside momentum. Right now, again, it's another one of these patterns. It's just sitting right there on major long-term support coming in from the upside. We've accomplished really essentially nothing since April in this name. This is a major, major level of support. And this is a major zone to pay attention to, not just for Google, but to tech in general. Microsoft is also trading in at a key level. So you can see on the upside, we have what was that support from the breakout back in 2021, right in here at about this 270 to 280 zone. And on the downside, this 240 level is really, really important. That's where we get the breakout from back in the beginning of 2021. So what we're looking at here in Microsoft, 240 and 275 or so. A move back above this gives us a target where we've got that next level of resistance in at that 290. The major, major level on this is still back up at 310, right? We still have a series of lower highs and a series of lower lows that have been put in here in this name. This is a major level. Lose that 240 zone, we're in trouble. Hold 240, get back up above that 280 zone. We've got the potential for that move higher. Next up, I want to take a look into Visa. Visa, essentially, if we want to look at this like a box, we've really accomplished nothing here in the last couple of years, right? We had a big breakdown in 2020, like we all know, and it came right back up into this box. We had a brief breakout there in 2021, but really, since the middle of 2019, we've essentially traded somewhere around this 210 zone. We're trading right in the middle of that range. So no real price appreciation in the last couple of years. Again, we've had some volatility on the upside and the downside. We look at the bottom end of this box, right? We're looking at that like 185 zone. And really the top end of this box, really that 240 zone. And again, we're right in the middle here. So you can see we got about equidistance upside, equidistance downside. Key levels, need to hold above 180, need to get above 240. Staying inside this range does nothing for us in terms of price appreciation on the chart. Just continues to be that sideways trading range that we have seen for so long. Enphase has had a pretty solid push here after that sell-off there in January. Consistent higher lows, 120, 130, 140. And we kind of put in a little bit of higher highs. They're not much. They're marginal, a couple of points, nothing big. The major level that we really are watching in on this chart right here is those highs from back in 2021. It's right there at 230. And this zone, again, like maybe 210 to 230. It's a zone that's like this. We spent a little bit of time out of that and then immediately came back underneath. So this was that false breakout, fell back into the box. The lower end of this box is all the way back down in here, and so we have basically traded sideways for the majority of the last 2 years, but we have a series of higher lows that are in place at that point in time. So we're really watching this chart closely. Earnings have still been pretty solid, so if you look, you got 53 cents in last July, then 60 cents in October, 73 cents in February, 79 cents in May. You still have earnings growth on this, but you haven't had any price appreciation growth. I think the earnings that come out here are going to be really important. A move above 230 is a really good sign for this space, and the short-term support is 170. Major long-term supports all the way back down around that 120 zone. So again, higher lows have been put in play. But the key to this, I think, is going to be that 230 zone. Above that, things get really interesting once again in this name. Last name that we're going to take a look at for the key earnings on Tuesday is going to be Texas Instruments. We had our big breakout right in there about 135, and two right around that 147 zone, right? So we can see this price. We came up here, we fell, and finally we broke above it, held, and continued to go higher. And then this year, of course, we have given all that back, and we've pulled right back down to that major level of support. A lot of the things that we've seen in all these charts that we've taken a look at, a lot of these things are trading or held that major level of support recently, but still have a series of lower highs that are put in place. We need to see some of these names really start making a higher high here throughout earnings season if we want to get any sort of price appreciation across the board. Right now, bulls have stepped in a lot of names and held those key levels of support, but haven't won any upside battle. We're looking at Texas Instruments. We need to move over 180, and you got to hold that 145 zone. A lot of additional names reporting throughout the course of this week. We will certainly take a look at Wednesdays, Thursdays, and Fridays key earning names, as well as dive into what's going on with the Fed rate decision in on Wednesday in this week's videos. So we hope you guys found this information useful, and we'll definitely see you tomorrow. Have yourselves a fantastic afternoon. Take care.